Ladies and gentlemen, welcome back to the channel. Here in this video, we will go over all of your breaking news today in markets. And there's a lot of it. There's a lot of headlines that don't sound great, especially with a potential Iranian conflict. And I think that is some of the pressure on markets today. And it really has nothing to do with physical combat or strikes on Iran. It has to do with the implications for energy markets. JP Morgan today is out with a new note that if a conflict does start with Iran, you could see oil hit $130 a barrel in a more worst case scenario. That's a shock on the economy. That has serious implications for economic activity because, believe it or not, you may think like the iPhone market's the biggest market in the world, or cell phones in general, or internet, or blah blah blah. It's actually transportation and gas and everything that has to do with those areas is the biggest single sector of the economy. If gas prices today were to go to $5 a gallon, in other words, that's going to have the biggest negative effect on the entire economy instantaneously. If gas prices were to fall to $1, that's going to boost the economy instantaneously. And energy shocks are never a good thing, at least in the short term. So ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already, and let's get started. The US CBO says the House GOP tax bill would boost the rich and cut poor incomes. That's a lie. That's not true. These calculations are factoring in a lot of inflation that I don't think we're going to see. Okay, I think the innovation in AI is by far going to offset the rise in the deficit. We are in an AI Cold War with China. Okay, and that is not, my friends, ending anytime soon. You know what happens during technology Cold Wars? A lot of innovation, a lot of growth. If you're investing in that, you're going to get insanely wealthy over the next couple of decades. Okay, if you're not, well, you're still going to benefit, I believe, because I don't think we're going to see inflation during that kind of environment. And no tax on tips, no tax on overtime, that does not benefit the rich. Under Secretary of Commerce Kessler declines to elaborate on his role in the latest U.S.-China discussions, but he says that he was there for some of them. A top U.S. general says the IAEA report on Iran is troubling, and this report came out actually last night that says that Iran is racing towards a nuclear weapon. This is very reminiscent of the whole Iraq situation 25 years ago, where we thought they were building a nuclear weapon, so we invaded Iraq, and come to find out they had either moved them or they were not building a nuclear weapon. And that's part of why markets have been a little on edge in the past couple of days. It looks like a conflict with Iran could be coming any time. And even though wars historically are good for markets, the uncertainty, the volatility beforehand is typically not. Besant says the U.S. has implemented maximum pressure strategy on Iran. U.S. Envoy Witkoff plans to travel to Muscat on Sunday for a sixth round of talks with Iran, according to a source familiar. U.S. Treasury Secretary Besant says, I believe we will see more trade deals coming very quickly. This is one of the headlines that kind of boosted markets. For whatever reason, Scott Bessent is seen as a more reliable source for information than others. He's seen as more respected on Wall Street because of his role that he once had on Wall Street. He worked for the George Soros Fund. I mean, he's a billionaire. Like, people tend to take his word a little bit more seriously. U.S. Treasury Secretary Bessent says business chiefs tell me CapEx is ready to go post-tax cut. And this is very simple. This is one of the reasons why I actually think this tax bill is going to be a really good thing, is because there's those provisions for 100% tax write-offs, meaning that if you run a business and instead of maybe a 50% tax write-off, which is great, you could get 100% tax write-off. You're going to invest your money a little bit differently. And for anyone that does not understand what a tax write-off actually is, it's not a tax credit. So if you have kids, let's say, and you claim your kids and you get a tax refund, that's a credit. A tax write-off is a little bit different. So let's say I made $500,000, okay, in any given year. Or let's just call it $1 million for easy math's sake. And I decided that I wanted to buy a Cybertruck for $100,000. Well, if I have 100% tax write-off on that, that means I made $1 million. I'm going to spend $100,000, and I write that $100,000 off. That means I'm only taxed on $900,000 of income minus any other, tax-related stuff. Okay. If it's a 50% write-off, that means I made $1 million. I'm going to spend $100,000 on a Cybertruck, but at a 50% write-off, I'm going to be taxed on $950,000 of income, even though I still spent the $100,000 on the Cybertruck for business purposes. Okay, that's the difference. So, it will make a difference for companies in how they invest their money. Undersecretary of Commerce Kessler says more funding would boost U.S. export control enforcement. Prime Minister of Canada's Carney sees progress in trade talks between the U.S. and Canada. Mark Andreessen on the AI race says 20 years from now, the world is going to be running on either Chinese AI or American AI. AI will be the control layer to everything, and it will teach your kids. I think, again, he's probably right on this. I think the world is underestimating the impact that AI is going to have. AI is going to be everything. Like, literally, it's going to affect everything. And hopefully a positive way. U.S. officials told Israel that they are fully ready for an Iran operation. So again, these are some of the kind of nervousness, jitters that Wall Street is getting. And it does say as well that an attack on Iran could spike oil prices to $120 per barrel, which would be a shock. Definitely an economic shock. Because believe it or not, transportation is the largest industry in the world. People actually driving their cars is the largest market in the world. It's where the most money is spent on vehicles, on gas. And gas is the biggest real-time lever, gas prices, that can help or hurt the economy in any given moment. If gas prices go up to $5 a barrel or $5 a gallon today as a national average, that's going to hurt the economy a lot. If gas prices fall to $1 a barrel or $1 a gallon, that's going to help the economy a lot instantaneously. So, yeah, that's the real implication, I believe, for Wall Street in some kind of Iran conflict. What could happen to energy prices? Iran's foreign minister says the IAEA's resolution further complicates the next round of nuclear talks with the U.S. India and the U.S. harden their stance in trade talks as the July deadline looms. And Trump says that this China deal is great. Goldman Sachs today cuts their 12-month U.S. recession probability to 30% from 35%. Iran's president says even if Iran's nuclear facilities are destroyed by bombs, we will rebuild them again. So, yeah, doesn't sound like tensions are ratcheting down anytime soon. UK Business Secretary Reynolds says he is hopeful of a US-UK deal on car tariffs by the end of the week. Iran's president, in response to the IAEA's governor's decision, we will continue enrichment, continue on our path, and will not deviate from the current approach. Traders now see an 80% chance of a September rate cut, with a second cut as soon as October versus December as seen before the CPI data that came out yesterday, in which we were also correct on here on this channel. I said I did not think we were going to see inflation in yesterday's inflation report, and sure as shit, no inflation or very little inflation, coming in way lower than expected. And I believe this is going to be the common theme over the next 6 months. Wall Street's going to say, okay, this is going to be the inflation report, that we see the inflation, and it's just not going to show up. And then by the end of this year, the Fed's going to be in a position where they're going to say, oh my gosh, we didn't see the inflation. And maybe, hopefully by then, it's not too late and the economy is still doing okay and the Fed can cut rates multiple times. In that scenario, I think stocks are going to rally massively over the next 6 months. Partially, that is because U.S. initial jobless claims came in at 248,000. The forecast was 242,000, and the previous week was 247,000. So you're definitely starting to see a larger spike, a more prolonged spike in initial jobless claims. And this is seen as one of those more real-time indicators of what's going on in the labor market. Core PPI year over year came in at 3%. The forecast was 3.1%, and the prior month was 3.1%. So PPI, again, came in lower than expected. And again, US core PPI month over month, actual came in at 0.1%. The forecast was 0.3%. So across the board, whether it was CPI or PPI, forecasters were way wrong on the inflation print. We're not seeing inflation, okay? And Wall Street seems like they were convinced that we were going to see inflation in these reports. Iran's Revolutionary Guards commander says that Tehran would respond in a more forceful and destructive way to Israel than in past offensives. Trump said he will set unilateral take-it-or-leave-it tariffs on trading partners in the next 2 weeks. And the UK economy shrank by 0.3% in April, a sharper decline than forecast. Now, the CNN Fear and Greed Index today is coming in at 62. Market momentum is fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand is greed. And junk bond demand is currently neutral. We should have a new AI investor sentiment survey as well over here. And it does look like bullish investors jumped from 32.7%, jumping up 4% to 36.7%. Neutral investors rose about 4% from 25.9% to 29.7%. And bearish investors fell from 41.4% to 33.6%. This is the first time in a while you've seen such a large spread between bullish and bearish investors. Bullish investors now outpacing bearish investors by about 3.1%, which in the last 3 months, you've only had more bulls than bears 1 week, and that was the week of May 21st. And you were only outpacing by about 1%. So you're starting to get a little bit wider there. But what's interesting is I don't see a lot of Wall Street that's getting any more bullish on markets. If anything, it seems like a lot of them are getting more bearish on markets. So take that for how you will. The percent of stocks trading above their 50-day moving average at 75.5%. Again, just meaning there's a lot of correlation. A lot of stocks are doing well together, and a lot of stocks by now are above their 50-day moving average, as we've kind of stalled out right below new all-time highs. And if we can break new all-time highs, that's where the chase really starts, and that's where Wall Street's going to start to feel the pressure that they need to get allocated into markets once again, because a lot of hedge funds and institutions, they're just waiting for the reversal to get in lower. And well, whether or not we break new all-time highs is going to be pretty important for hedge fund and institutional positioning. So let me know your thoughts on all of this down below in the comment section. Have a great rest of your day, and I will see you in the next one.